All right, and the next piece to the puzzle is making sure that you have your taxes ready and complete. Now, this tax thing is just to be clear and for all disclaimer, we are not demanding that we are your tax professionals, so don't hold us to any type of specific thing in terms of that. However, we just want to give you some insight to think about because when it comes to the lending side, this will always come up. All right. Now, when you're looking to get funding, especially at the highest level, the first question is going to come up is, do you have your taxes filed? Okay. Whether it be personal and business, they want to see normally at least 3 years of taxes done. All right. So this is where it gets tricky. A lot of clients have a situation where they want to show the minimum amount of income on their taxes. So they falsely don't report their true income. What does that mean? Means that let's say they make 300K. They'll only report 150 or maybe 100K. What happens when you say you only make 100, but your bank statements say otherwise, or even if you have cash that says otherwise, you're actually violating the tax law, which will cause you other issues down the road. But at least in the immediate issue, you want to make sure that you show as much of your income as possible so you can qualify for the maximum amount of funding. Okay. Now, most people would say, well, I don't want to owe the IRS all this money, right? And they're afraid of that. But I'll give you a different way of looking at it. Let's say you have 150K in income, and let's say the IRS says you owe $50,000 for, let's say, 2024's taxes. And then let's say you had a similar amount, maybe a little bit less for the previous year's taxes. Okay. What happens is if you say that, you made this amount of money and you don't, you may take some of your expenses out as a business owner, you may have some deductions, but you may not put all your deductions in there. Typically you're going to see a much higher approval rate when it comes to lending. If you go and you take all the deductions out, right, you're going to have a hard time getting approved from any bank anywhere for any large amount of money. Now, if you were to say that you did, let's say if you out of that 150, and let's say out of that 150, maybe, I don't know, 60,000 or let's say 30,000 was your expenses. Well, now they're only taxing you on the 120, which will make your tax bill a little bit less, but it could obviously be lower. However, when it comes to funding, now they're looking at your overall income over the last 2 years. This applies to buying a home. This also applies to getting business credit cards, personal credit cards, and business loans and lines of credit. So let's say you want to report, let's say 150,000 for last year's taxes. Okay. So let's say 150 for 2024 and another 125 for 2023. All right. In that situation, normally your tax bill, if you reported absolutely no, expenses, you're probably upwards of 90K, $80,000 to $90,000 in tax bills. All right. Which is pretty high. And I definitely can understand the concern. However, here's what you have to consider. You want to report that you have expenses, obviously, because you don't want to put yourself in a scenario where you have an unnecessarily high bill. And more importantly, that you have to be truthful in terms of what your real expenses are. If you have, real expenses in the business, which all of us do, then you're going to need to report all that information, right? But the problem is some of you get to over-reporting, where you report everything as a loss and you start just saying, oh, I lost this and lost that, and now I can't go through and do anything. And now your business is at 100,000 in the negative. Okay. Now, why in the world would any bank or lender give you money when your business is way in the negative? You're in the red. Why would they do that? So it makes no sense, right? You wouldn't give yourself money. You wouldn't give anyone else money if their business was way in the red. Why? Because no matter how good their credit is, there's no way for them to be able to pay it back. So this is why I said you have to make sure your taxes are done correctly. So that way there's no chance of you ending up in a situation where your credit and income is high, but your tax is misreported because your tax person keeps telling you, oh, we want you to show as much of a deduction so you can either get money back because let's say you have a child or you're married or you had a job and a business at the same time, but you're now in a situation where when you make that choice that all the banks are saying no. Okay. Now, the other side of this is, like we talked about before, you're going to have a higher tax bill if you do claim less deductions. But as much money as you're losing in that department, we will work to get you 10 times more when it comes to the funding side. So that way it will be worth that loss. Okay. Because when you get the funding, now you can operate. And this is the beauty behind that. The funding money that you receive, whether it be loans, lines of credit, credit cards, all of those funds are not taxed. Okay. So what does that mean? You can get as much as you want and there will be no seizure of your credit cards and all that stuff. Okay. You're in a situation where that's pretty much impossible or highly unlikely to happen. And now let's say you were going to owe $30,000 in taxes, but you got $200,000 in loans, lines of credit, and credit cards. I think it's worth that gamble. Okay. So stop running away from the government by not trying to pay taxes. You want to run into it because the more you can show you paid, keep in mind, the banks look at the government as the ultimate proof of income. Meaning that if you paid, let's say $30,000, $40,000, $50,000 to the government, or even if you set up a payment arrangement over time and you just owe a large amount of money, as long as they see you making those payments, whether it's for a mortgage loan that they're trying to get you approved for, or even the business loans or lines of credit, now they'll be able to feel comfortable that, hey, you're actually somebody that gets it and understands the game. Okay. So you do not want to be a person that just takes a bunch of losses and shows no income. But you also don't want to be a person that shows no losses because now it looks like you're trying to falsely inflate your income. Okay. So you want to make sure you have that happy medium so that everything checks out. So when you do that, now this is how they'll calculate it. So they look at the last 2 years, right? So again, as we talked about, if you reported that you made 150 in 2024 and 125 in 2023, okay? So now you're right at 275 in total income over the last 24 months. So the more you go through the process of getting lending, they're going to look at, okay, well, what was your profit in that? And let's say in that 24 months, maybe your profit was $240,000. Okay. Well, now that puts you at a situation where now you have $10,000 a month in income. That's not hurting you. Profit, and it's as a positive side or positive cash flow, whatever you want to call it. So when you want to get a loan, now your loan term and or line of credit term can be a lot higher because they see that you can afford to pay $2,000, $3,000, $4,000 even when it comes to your monthly payment. So if your monthly payment's higher, you only get a high monthly payment if you have a higher loan amount, right? So this is all connected. So that's why you want to make sure that you have the taxes structured in the best way possible so that you can make the most money, get approved for the most amount of money. And now you're not in a situation where every bank's declining you because they see that you can't afford it. Because the other part of this puzzle, especially for some of those of you who are full-time entrepreneurs, if you make 10K in positive income, keep in mind the information on that personal financial statement is going to come up. So let's say because remember the information I just gave you was mostly for your business income. Okay. So now factoring your personal income and more importantly, your personal expenses. If they see that you have a bunch of personal expenses, plus you have a bunch of losses in the business, that can hurt you. I had a client that did, right around, I think it was like 545K. He reported that he had 485,000 in expenses. So it made him have basically around 60K in income, okay, in terms of profit. But he also had a $500,000 house, which I believe cost him right around like $3,000 or $4,000 a month, something like that. I don't remember the exact numbers, but it was a higher amount. When he did that, it took him completely out the game when it comes to getting approved. Okay, so then we had to go through making sure he filed the 2024, and then he was able to qualify and get quite a bit of funding. But when we go through this, those taxes are extremely important. So you do not sit here and think about, oh, I'm going to get this large amount of money and I don't have my taxes in order. So again, we can help walk you through the process and get all this tax stuff in order, but you have to be able to be or willing to be coached and listened to. We coach a lot of times, a lot of CPAs and all of the above, just because some people say they're professionals, but they don't understand the lending part of the game. Okay, so we want to make sure all that makes sense so you can get the best results.